What is up, YouTube? Welcome back to Stacks at the Numbers, and it's Wednesday. We got just about 30 minutes to go here before the close. Market's still down, as you see. 10-year up over 4.33%. 20-year yield now up over 3.5%. The dollar still up over 1%. And usually when the dollar is up and yields are up, that usually translates to stocks being down. So as you see, we're still pretty red here across the board, starting to gain a little bit of momentum here going into the close, but we have to wait and see tomorrow. It may just be a little short-lived little bounce here. But I wanted to do a quick update here on FuelCell Energy, ticker symbol FCEL, listed here on the NASDAQ. Stock right now, $1.16 a share, down a nickel, about 4.5% here. And we've been in this downward kind of descending wedge here, in my opinion, basically since the ball dropped in 2022. And the problem is, I still say, is the inconsistencies in the revenue. And I had multiple circles here laid out at all of these earnings, basically saying that, in my opinion, if the revenue did chunk in and surprise and actually started to get consistent, it could be one of these quarters that potentially forced us out of this wedge and potentially started to climb the stock, maybe back up to 3, maybe 4. Who knows, right? But the problem is the company, in my opinion, has just been very, very inconsistent. And if we go back to when this all started, we can see we have a big miss here on the top and bottom line. You know, we missed by 7 million in change. Then the next quarter, the company beats no problem. They beat by 5.5 million. Then the next quarter, they miss by almost 50% here, posting 16 on estimates of 32.5. Then the company breaks above 40 million. They post 43 on estimates of 35.8. They beat by over 20%. And then the next quarter they miss. However, you know, still holding that high 30 million mark. So, in my opinion, this really wasn't the worst quarter, but of course the bleeding at the time was really helping to keep the stock down as well, in my opinion. Then we go to the next quarter and we can see beautiful beat top and bottom line here, beating on revenue by over 10 million. Then they did it again back to back, but of course they happened to miss on the EPS side by a chunk, but the revenue beat, as you see, by over 50%. Then from that point, 38.349 million. From that point, revenue has been taking big hits here for the last couple of quarters. And as we see now, we have the beats on the EPS, which the company has been doing recently for the last couple of quarters, even though the revenue has been missing by chunks. And as we see, we're back down to 25.5 million. We missed by over 2 million, or a little less than 8%. Then the next quarter, we're down to sub 22.5 million on estimates of 25, missing by over 10%. Now, as of last quarter, estimates were back up to above 25 million, and the company posts 16.69 million, missing by roughly 35%. However, the trend you're seeing here, market cap right now 524 million. However, the trend you're seeing here is that the EPS losses are more narrow, even though the revenue has been consistently dropping down. And I don't necessarily want to put them in the same category as GameStop, but it's been a very similar situation, in my opinion, and I'm talking just over the last couple of quarters. Because if you remember, GameStop, you know, they're trying to tout the fact that they're beating on the EPS side, but they want to try to sweep under the rug the fact that they're potentially seriously struggling and could potentially be viewed as a dying company, in my opinion, and the revenue has been consistently slipping and missing estimates. So, you know, in my opinion, they're just trying to potentially make these situations look better than they are. And even though missing on the EPS side and posting a wider loss is bad, in my opinion, I still say that, me personally, I feel that the revenue, especially in this situation, because it's been so inconsistent, I think the revenue is the issue here. And we were kind of getting towards the tightening apex here. Not necessarily, we could go out to next quarter, but again, even here, you see I had the circle right there by earnings, I had the big green arrow, and I said last time that if the company is able to come out and actually beat on the top and bottom lines and start beating these estimates, then that may be the catalyst that causes us to pop out of this wedge and actually start gaining momentum again. And then what's the company do? They beat nicely on the EPS side, and then they miss by a mile on the revenue side. And I still say, in my opinion, that is what is keeping this stock down. So now we're even closer to the apex coming into next quarter here, estimates of around the first week of June, roughly 2 months from today. And look at the estimates now down here at 21.955 million, right? So now we're sub 22 million. Estimates have been consistently dropping. And now it's all up to the company. So I couldn't even lean in a direction right now, in my opinion, because of course, looking back at the last 3 quarters, they missed on revenue, right? So you could say there's a good chance that they're going to miss on revenue again. But the question is, by how much if they do miss? And what will they post? That's what I'm curious to see. And I still say, in my opinion, I would have a wait and see mode. The stock recently hit new 52-week lows after they missed earnings here by a chunk. And if we zoom in a little bit, you can see, yeah, it was March 15th. You can see top left of the screen, the O, the H, the L, the C, the open, the high, the low, the close. You can see the low, 97.94 cents. That is now a new 52-week low that was recently hit. However, we have bounced and started to climb up since then. So, overall, if the company beat here on the revenue side, in my opinion, we may have either broken out of the wedge or at least tried to break out of the wedge. Even if we come down here, you would see we'd be looking at what? Maybe about 175. And you can see that the company was holding like 120 and then dropped, and now it kind of got back up to 120. It's been bouncing around here off of this fib, roughly around 110. So, in my opinion now, with this next earnings coming up, I have to say I would still personally be in wait-and-see mode, in my opinion. Let the company come out, beat earnings, gain a little bit of momentum, start to rally up again. And then we could potentially consider stepping in on the situation, because in my opinion, I had a feeling that the stock was going to continue to go lower. Again, we have a NASDAQ company that did a reverse stock split basically around a year before all that stimulus money came in and pumped the stock back up. So, in my opinion, we still do have a negative situation, and with the stock touching that sub $1 level, if we do drop back down here to these low 90s, as you see, about 94, 93 cents here at this trend line, if we come back down and retest this level, then again, if we stay there for a while, we could potentially, we could potentially get our NASDAQ compliance letter, and we may enact a reverse stock split again, which of course, in my opinion, is a very big negative. Now, as of late, I drew out a couple of trend lines here. We had the rally last time. I did a video, I think it was like around here, like early January, and the stock missed on revenue, of course, but it went higher for some reason, and then it immediately tanked and pulled back to the low $1. Look at all of those red candles there. You had one green day throughout almost a 3-week period. So, in my opinion, that tells me that this was all very short-lived, probably a technical move, and we immediately gave it back. We didn't keep any of that value. So, this is why, in my opinion, it looks weak. It looks weak. But I drew out some trend lines here from the top of this line here, December 27th, 23, connecting to that top right there, February 12th, 24. And you can see that cutting that down, it's been fighting to get above that trend line, and now recently it has. So only time will tell now tomorrow if we potentially bounce up and continue to rise, or if we break this trend line and come back down into this range. This bottom trend line is going from the bottom of this candle here, Wednesday, January 17th of 24, connecting to these bottoms here, March 15th, 2024, coming across the bottom. So in my opinion, this is now our this is like our yearly support level, but the stock again has been trending upward here, so now technically this is our support level. And I went from the bottom of March 15, 24, connecting to the bottom right there, April 5th, 24, and you can see the stock today pulled back and is sitting right at that trend line. And we have about 25 minutes left to go, so of course anything can happen, but it does also look like we're kind of in like this upward, potentially consolidating channel, right? Which means we could potentially break back down to the downside. And again, only time will tell, but the stock right now is sitting right near this level, as you see, and pending if it drops here in the last 20 minutes or so, we could potentially go back to the low, which also would potentially form a bearish hammer, in my opinion, on the weekly if we look at stock charts. But let's look at the numbers real quick again, see what we're looking at here. So the company consistently missing on the revenue side for the last 4 years in a row. Switching over quarterly, again, we had a really, really nice beat. And then we can see the misses have been widening on the revenue side, missing by almost 8%, missing by almost over 10%, and now missing by over 35%. So I'm not exactly sure if these trends are going to continue, because if they do, that means that the company should miss, well, not should, but you know what I'm saying. If we follow the pattern, then the company will miss by 40-50%, and I don't know if that'll happen, because then that means the company's going to post like 12 million for the quarter. So I don't think that trend's really going to continue. However, again, like I said, if the company posts like 15-16 million here, in my opinion, I really do think they're going to take it to the shed, and you may see low 90s and maybe even break down into the 80s, believe it or not, in my opinion. On the EPS side, annually, we had 3 years of misses, and now we closed out 23 with a nice little beat here, coming in with a loss of 26 cents for the year on analyst expectations of a loss of 28 cents. And now for 24, you can see losses basically expected to remain flat, still forecasting roughly a loss of about 28 cents a share for the year of 24. So only time will tell, of course, but in my opinion, I just don't see how... Narrowing the losses, of course, is a good thing, but I just don't see how you can try to make that a priority above actually generating revenue. But again, that is just my opinion. I know, again, the company talking about increasing its manufacturing capacity and whatnot, so it may just need much more time than originally anticipated, right? So we may turn around 6, 8, 9 months from now, and all of a sudden the stock's like back near $2, and production is increased and revenue is starting to come in. Supposedly they have a backlog of a touch over $1 billion, but I just feel like they're not able to generate the revenue off of that backlog. I just feel like they're kind of stalemated here, in my opinion. And also the debt we were watching was decreasing, and as of late it's been increasing again. As you see, going back Q1 of 23, debt up here about 91 million, then we dip down to sub 90 million. Then we jump back up to almost 115 million, 129 million. Now, as of last quarter, slightly down to 127 million, which in my opinion is still kind of a red flag. But the company is holding a couple of $100 million in cash here. But also at the same time, we can see something like the free cash flow sitting here now at minus 68.83 million. And if we go back the year before, you can see it was slowly clawing back up. But this time last year, free cash flow was minus 61.14 million. So this time last year, the company had about 33% less debt. Free cash flow was about 15% less negative. And the company had, it's looking like about 16 million more dollars in cash. So... if you are a longer term holder here, you're really going to need to weather the storm here in the short term, it looks like, in my opinion. But, it's really not all negative. It's just unfortunate that the company's posting inconsistent revenue, in my opinion, because looking here, we can see that assets are heavily outweighing liabilities. And if we pull up our balance sheet, we can see the one issue I have here is that assets and liabilities were both trending downward. Nice. Then we immediately pop back up to where we were. Got up to above 950 as of last quarter, 923 million in assets. So going back to Q3 of 22, we can see the company had over 944 million in assets with almost 185 million in liabilities. And now we fast forward, and assets took about a $21 million hit, and we're down to 923 million in assets. But you can see liabilities essentially basically back to where they were. We did have a nice drop here quarter over quarter. However, again, we had a big drop in the assets as well. So I'm not necessarily sure if that would be a a big positive in my opinion. But we can see again, liabilities back up here, 181 million, almost back to that level, while having 20 plus million less in assets. Total assets minus total liabilities yields total equity, and we can see the equity has been bouncing around, but now as of last two quarters, excuse me, it's been dropping quarter over quarter, now sitting here at about 742 million. So 742 million equity, we have 127 million in debt. If we do, equity minus debt, we're at about like 615 million. The company right now has a market cap of 517 million. So you could maybe make the argument, we can increase the market cap by maybe 100 million and change, but that's only about 20%. That would bring us to like 135, 140 a share. That's not really the move that we want here, in my opinion. But the problem also is the book value per share is starting to chip away. And as we see, it was up here at 1 3/4, pulls down to the 160s, the 150s. As of last quarter, 147 a share. So looking at assets outweighing liabilities, and again, if we want to take equity minus debt and view that as a potential metric to say that the stock is undervalued, I guess I can kind of appreciate that. You can also make the argument, hey, listen, book value, is sub 150, the stock's at 115, we're a little undervalued. I understand that, but remember, these stocks trade off of their recent news and their recent catalysts, right? So if everyone's kind of bearish, or everyone's kind of having like that wait and see neutral attitude, and of course the company consistently missing on the revenue side, in my opinion, this is what leads to these situations, to where it almost may not make sense in some of these fundamentals, and it strictly, in my opinion, comes back to the ability of the company to actually even meet these estimates, or of course potentially exceed them. So I just think it may need a couple of more quarters, but I still say, in my opinion, I would be wait and see. I personally see no urgency to step in on this stock. And I wanted to show you also the cost of goods here as well. We can see back here, Q3 of 22 brought in about 43 million. It cost 47. Here we brought in 39, cost 52. That was a big minus right there. You can see gross profit was over minus 13 million. But then somehow the gross profit goes positive here by over 5 million. And this is really, I believe, one of the only times that revenue outpaced cost of goods sold. But then next quarter, right back to business as usual. We have costs outweighing revenue coming in here, minus 6 million gross profit. Next quarter, minus 8 million. Almost got back to kind of flat here, less than minus 1.5 million. But now, as of last quarter, look at this. Cost of goods jumped up to 28.4 million, but revenue dropped down drastically to 16.69 million. And now, again, total revenue minus cost of goods sold yields gross profit. And you can see gross profit minus 11.73 million. This is the most in about 6 quarters, going back to Q4 of 22. So in my opinion, that is actually a little bit of a red flag. The operating expenses, we were sitting here in the low to high 20 million mark. Now we're in like the low to mid 30 million mark. However, the revenue has been decreasing, which of course yields lower operating income. Gross profit minus these operating expenses yields operating income. And we can see we were bouncing around, got to minus 40, back up to about half that, and then back down to minus 35, minus 41, minus 36. As of last quarter, minus 42.48 million. That is the lowest the operating income has been going back the last 7 or 8 quarters here. So this is why, in my opinion, looking at a lot of these recent numbers, I can appreciate the fact as to why the stock has been flat for the last 9 months. Everyone's just kind of sitting on their hands, waiting and seeing, and also bringing the stock down to new lows here. In my opinion, believe it or not, I think it's justified. I do think it's justified, but even looking at some of these metrics here, price to sales ratio used to be double digits, right? Now we're in basically mid-single digits, sitting here at about 5.3 times sales, but revenue and stock price dropped drastically over this time frame. So if the price goes down, the ratios are going to drop also. Our price to book, again, we can see we were above 2, but then the revenue started missing like crazy, and the book value as well has been decreasing. So this is why I could understand the argument, oh, we're trading less than book value, but there's no rule that says you have to trade above book value. And price to book right now sitting at 0.82 times book. The enterprise value, believe it or not, this is supposedly what another company would be willing to pay to buy out this company. We can see it's actually about 15% lower than the current market cap of the stock. But the return on assets, as we see, we were climbing up here. We dropped down a little bit, back down to about minus 12%. The return on equity, same thing, climbing up, dropped back down a little bit, minus 15%. Return on invested capital down here, minus 13.2%. The gross margin percentage is now the lowest number that we've seen going back the last 7 quarters. And as you see, before that, the lowest was minus 34.2%, and we have more than doubled that now. And as of last quarter, we're currently sitting with a gross margin percentage of negative 70.25%. Look at this operating margin as well, just completely falling off a cliff. We were minus triple digits, and we started to claw back. And then we just started to accelerate back downward here. We were holding about that minus 162, we'll call it, percentage point. And now you can see, as of right now, the operating margin percentage for last quarter is sitting at minus 254.5%. EBITDA, earnings before interest, taxes, depreciation, amortization, was here at minus 50, right? We dropped down drastically, but then we chunked back up about 50%. And then we dropped back down about 50%. And then we almost doubled here, had a slight tick up to minus 132%, and now EBITDA margin is sitting at about minus 203%. The net margin did have a little bit of a bump here quarter over quarter, going from minus 135 to about minus 118.5%. However, even with this slight bump here and this bad quarter, these are technically the worst quarters that we've seen over the last 7 quarters and change. So in my opinion, I just feel like there are way too many negatives outweighing the positives, and I'm personally not seeing any urgency here. Again, there were headlines talking about they came out last earnings talking about how they're going to increase the manufacturing capacity and whatnot, and they talk about the backlog again. And listen, that is great. But the problem is it may not actually translate to revenue dollars for another 6, 9, 12 months. Who knows? And the problem is that these big negatives, in my opinion, really can't be sustained. If you're more of an up-and-comer and you're growing in the space, you can't have, in my opinion, inconsistent revenue. And you can't swing from 43, 45 million in a quarter and then all of a sudden chunk back down to 19, 17, 16. I just don't see how it's possible. Inventory turnover was climbing up nicely to almost 2, has been consistently dropping now quarter over quarter. Inventory turnover sitting at 1.28. That's the lowest it's been going back the last 7 or 8 quarters. Asset turnover was climbing from 0.12 to 0.17, consistently decreasing now over the last several quarters, sitting here at 0.11. That is the lowest it's been going back the last 7 or 8 quarters. Our debt was slowly increasing as basically all other metrics were decreasing, so our debt ratios are consistently climbing here quarter over quarter. And again, we can see, look, we were missing big on the EPS side 4 of these 5 quarters. Now the last 3 quarters we've been beating on the EPS side. But now look at the yin yang, so to speak, of the situation, because now we were beating on revenue 3 of the 5 quarters here that we were missing on earnings. And now the last 3 quarters we're beating on earnings, but we're missing huge on revenue. So in my opinion, it just seems like a recipe, I don't want to say for disaster, but it seems like a recipe for continued volatility and potentially even newer lows coming, in my opinion. And we can see, again, based on what the company has been showing us, Q2 before this, again, next quarter coming up June, first week of June estimates. But we can see now revenue estimates back up to almost 22 million. And this time the year before, the company blew estimates out of the water and they beat by over 50%. But then you look at the year before and you can see the company missed estimates by a mile and then they missed by about 50%. So who knows what the heck this company is actually going to post here for this quarter. But in my opinion, based off recent trends, again, this wouldn't really be a situation that I would even look to play, just because in my opinion, it seems very unpredictable. So even if you wanted to go short here, I just feel like there's no certainty, and the company could randomly surprise, and then you could get burned. And on the flip side, of course, if you wanted to go long here, thinking that this is the bottom, because we've kind of been flat for the last several months, again, we know worst case scenario, the company could potentially miss by a mile again, and then the stock could chunk down into the low 90s, potentially the 80s, and you can end up getting burned, losing a quick, 30, 40% that way as well. So that's why I'm saying, in my opinion, I would have wait and see mode. I would let the company prove itself to me. And if they are able to come in near this 22 million number, and then we can see estimates jumping back up 29, 37, 36. So if this actually happens and they're able to start reporting in line or above some of these forecasts, yeah, then in my opinion, we have a completely different situation on our hands here. But right now, in the moment, I do think we potentially see newer lows. I do think we potentially get our NASDAQ letter, and I do think that the company may enact another reverse stock split. And we could make the argument again that it is too low. However, we feed off of consistency and we feed off of catalysts in this market, in my opinion. And recent catalysts have been more negative than positive. So, just look at these numbers coming down here over the quarters here. Just heartbreaking. But if we look annually, we can see, look, the company expecting a big drop of about 20 million in change here in revenue year over year. Looking to close out 24, 108 million. Right? We haven't been at that level since 21. And even further back here at 2016. But after that, supposedly, it's looking to ramp up rolling into 25. We can see estimates forecasted for almost 187 million for 2025, over $250 million for 26, over 400 million for 27. So I'm not saying that this cannot happen. The problem to me is it just seems like we are much, much further behind schedule than previously anticipated. And I just think it's going to take several quarters more before we do potentially bottom out and really begin that U-turn. Now, on the technical side, again, right now we're sitting at 115. We have about 8 minutes to go. So we're looking like we're not going to close below this trend line. And of course, that would put a damper on the bear hammer that I was looking at here as well. But we can see, let me take the inspect off. We can see here on the daily, we can see with this drop, the MACD potentially starting to curl back to the downside. But last time it had a little bit of a bounce. But we are technically in this little upward consolidating channel. So we could break and drop to the low ones at any moment. As you see, bottom Bollinger Band here on the daily, 102. That is possible. Of course, we have kind of been fighting to stay above the mid-Bollinger Band for the last couple of weeks. So we could very well bounce from here, get back up to 120 maybe, and try to get back or above this 50-day moving average. But in my opinion, it really technically shouldn't. But, of course, anything can happen. Only time will tell. We know this. But RSI basically middle of the road here. As you see, a touch below 49. I'm personally not really seeing anything in the technicals that could potentially drive us to a rebound. And stock right now showing me 114, the same 115, but we can see the low 113, right? So inside of the next 7 minutes, if we happen to drop down to 113 or close at a new low of maybe 112 even, that would potentially set up what's called a bear hammer, which could potentially bring us even further down. However, again, this is a weekly candle, and today is only Wednesday. This is not a daily candle, but, basically just laying out how it's currently playing out for you. MACD looks extremely flat here. RSI on the weekly sitting here a touch below 43, and you can see even off this pump here, this random pump here, you can see that the RSI basically just got to the middle of the road on the weekly, and then just slowly started to sell off and give it back and flatten out. So in my opinion, I still say I would be wait and see. We have this agreement with ExxonMobil extending extended through December 31st. Do we have any recent? UBS trims price target to 135 from 140. Wow, thanks for coming. Maintains neutral rating. See what I mean? So the price target was barely changed and they're holding their neutral rating, which basically means, in my opinion, wait and see. I'm sitting on my hands. I'm waiting for the company to show me something. FuelCell maintained at hold by Canaccord Genuity. Sitting on my hands, waiting. FuelCell maintained that neutral by B. Riley Securities, sitting on my hands. B. Riley trims price target to $2 from $2.50 after a big miss on recent earnings here. And of course, the company, again, you can see stresses positive outlook. And it is possible that, a year or two from now, we could be talking about a completely different situation and have to reevaluate the whole position. But here, in my opinion, I am just not seeing it. FuelCell reported first quarter fiscal 2024 revenue decline of 55% year over year to 16.69 million, missing estimates of 23.82 million. Decline in revenue, lower service product revenue compared to last year. But they beat on the EPS side, right? Estimates of a loss of 8 cents. The company posts a loss of 5 cents. Gross loss for the quarter totaled 11.7 million compared to gross profit of 5.2 million a year ago. That's a big swing. Operating loss expanded to 42.5 million from 22.5 million the previous year. This is what I mean. You can't have these losses expanding and accelerating as your revenue is struggling and decreasing. In my opinion, I have to say that is very negative in my opinion. Company stated gross loss but unfavorable margins. Adjusted EBITDA loss reached 29.1 million versus 14.4 million in the same quarter of 23. So that's over 100% move, right? A double would have been 28.8. They lost 29.1. FCEL's unrestricted cash, restricted cash stood at 348.8 million. Backlog, again, a little over $1 billion compared to 1.06 billion, 3.4% year-over-year decline. Company said, quote, "We expect that this quarter's performance will be the low water mark of the fiscal year due to an increase in operational generation assets during the quarter and expected product sales over the balance of the fiscal year." Quote, "For fiscal year 24, our top priorities remain commercializing our technologies, accelerating our global sales closure pace, and repowering service efforts in Korea, maintaining a strong balance sheet." In my opinion, they're not doing that. "Making disciplined capital allocation decisions and expanding our solid oxide manufacturing capacity." So in my opinion, if they are able to expand their capacity, then perhaps they can start chipping away at the backlog and actually start chunking in some revenue and potentially start meeting or beating these expectations. But again, in my opinion, until they show me urgency and growth and kind of force me into the situation because there's value there, in my opinion, I am really not seeing much value here. Brought in 16.7 million for the quarter, lost 19.8 million. I mean, I'm glad about this Exxon deal, but and see what I mean? Again, this is why also, in my opinion, I'm not beating these people up. I'm not attacking, Market Beat or anyone who puts out these articles because I understand you have a job to do, right? You have to say something. But this is why I always say, in my opinion, you get out what you put in. And if you just want to kind of just jump online and you see something's trending on Reddit, so you're buying it, or this is on StockTwits right now, so you're buying it, or this company, they do fuel cells, energy storage, so I'm buying it. In my opinion, you really can't just blindly invest into these companies because they can slowly drop down in value over time and nobody owes you anything, which is why I say, in my opinion, you should follow the revenue. But this was what, December 20th, right? And that's what I mean. Look, December 19th, We ran up on anticipation of these earnings. Earnings come out, disappoint again, missing revenue by 10%, and then we start rallying, right? But look at the next day after we had the pop up and started to rally, December 20th. Look, quote, FuelCell Energy could be turning a corner. Why? Why would that even be said? And this is why I say, again, in my opinion, do not just look at what's trending. Do not just read a headline of people saying this is the next best thing since sliced bread, so you got to buy it now. Do your own due diligence. Do your own research. That is hands down the best advice that I can give anybody. And again, we're supposedly turning a corner here on December 20th. And yeah, look good for about a week. And you saw a really nice rally up to $1.84, but again, in my opinion, totally unjustified, and then immediately tanked and gave it back, right? So if you bought in here hoping it was turning a corner at 1.5, you immediately made roughly 20%, and then you were immediately down about 30%. So, and now as of late, the company missed earnings again, and the stock recently hit a new 52-week low sub $1. So obviously, you could say it's all hindsight, but we knew it in the moment because they missed earnings again. But, we could obviously see that they have not turned this corner yet. And you can see I had the circle, I got my big green arrow, boom. I was expecting them to potentially beat and break out here. And of course, they miss revenue by even more. So this is why I'm saying next quarter maybe could be potentially your breakout moment. Estimates here, first week of June. Expecting a loss of 7.6 cents a share on revenue estimates of a touch below 22 million. So it's really all up to the company now at this moment. So if they come out again and disappoint, 15, 16 million in change, yeah, in my opinion, the stock's going to take a hit again. If they come out and randomly surprise and they post like 36 million or something like that, then we may be dealing with a different situation. And even if we come in here, let me extend this line out, actually. Yeah, but you can see, oh man. Even if they beat it up and keep it downward, you can see we're going into the 80s and the 70s to potentially run up back to the high 90s and have our pop out here to $1.40, $1.50 again. Look at how flat the stock has been for over 3 quarters now. This is why I'm saying, in my opinion, literally, it seems like everyone's sitting on their hands with this wait-and-see approach. I feel, again, that no one sees any urgency. We don't even have one strong buy on this situation. We have one buy, 7 giving it a hold, 1 giving it a sell, 1 giving it a strong sell. So, again, I feel that everyone is basically waiting and seeing or negative. That's what it seems like, in my opinion. And even the growth on revenue here, even if this happens, look, out to 2027, estimates of over 400 million. On that 400 million, we're still forecasted to be losing 17 cents a share, which means this company may need till 2030 to potentially see net income positivity. But obviously, we're going to have to cross that bridge when we get to it. But the last couple of years been really rough here, in my opinion. The last couple of quarters being even more rough, more inconsistent. They were doing better a year or two ago. So only time will tell. But again, in my opinion, no urgency. And if we zoom in, and if we potentially break this short-term support and this little channel, and we drop down to this bottom trend line again, this is connecting the bottoms of January 17, 24 to the recent lows there, March 15, 24. So if we potentially break these levels and start to drop down, in my opinion, we could potentially see maybe about 93 or 92 cents in change, maybe, which would be new 52-week lows, and of course would raise the flag for a potential reverse stock split to be coming down the road. But I'm going to end it there because I talk way too much. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day.